Welcome to weekly view on markets. This week, Nifty has closed at 17,094. Nifty staged a pullback on Friday after RBI policy. But for the week, Nifty was down by 1.34%. As usual, volatility was very high in the market during the week. RBI raised interest rate by 50 basis points on Friday, and the policy stance was withdrawal of accommodation. The RBI policy was as per the expectation of the market, and the policy stance was not hawkish by RBI. This is the reason why markets pulled back and closed higher on Friday. Nifty Midcap Index lost 1.32% for this week. Nifty Small Cap Index lost 1.54% for this week. Bank Nifty was the major loser. It lost 2.31% for the week. On Friday, after RBI policy, Bank Nifty gained around more than 980 points. Market has taken RBI policy in the right perspective. The volatility index, that is India VIX, remains high at 19.96. Let us look at Nifty chart to understand the technicals of the market. This is daily chart of Nifty. We can see that Nifty has closed at around 17,093. It is at the support level. If we look at the support line, Nifty has a strong support at 16,800 levels, and Nifty has next resistance at around 17,200. If that crosses, then Nifty has next resistance at around 17,700 levels, and major resistance at around 18,200 to 18,300 level. So Nifty twice earlier touched this level, and then we have seen selling from there. So this is a support and resistance level for Nifty in the next week. I expect Nifty to pull back from these levels. So traders should not take short positions at the current levels, as Nifty is trading at near the support zone. Now let us look at Nifty long-term chart, that is weekly chart. The weekly chart of Nifty still continues to trade in a band. The band is from 18,000 and at 15,100. That is the band. And when Nifty breaks out above this, we'll have a big target for Nifty. That is a long-term Nifty target. This is shown on the weekly chart. So, and we don't see any high bearishness also on the Nifty chart. Right now it is in a trading range. Now let us look at Nifty mid cap. This is a weekly chart of Nifty mid cap. Here again we can see this top line is the support level for the mid cap index, and it is still holding above the support levels. So the overall trend of Nifty mid cap is also a type of consolidation in an ongoing uptrend for the long term. Let us look at Nifty small cap index. Nifty small cap index is also trading in a band. The band is from around 7,500 to 9,500 in that range. And the interesting part to note on Nifty small cap index is that presently the Nifty small cap index is around 9,400, which is the level of 2018. That is 5/1 2018, it had touched 9,600. So now we are around even slightly below that level on Friday, 9,441. So we see lot of value in Nifty index because from 2018 many quarters have gone, earnings have come. So Nifty valuation, that is Nifty small cap valuation, looks quite attractive at this point of time. So I have been maintaining for last few months that there is a better opportunity in the small cap sectors. So this is all what the technicals on the charts are showing about the market. By looking at Nifty small cap, Nifty mid cap charts, I don't have a highly bearish view on Nifty. So market should stage a pullback from these levels, and any weakness due to some global development will she see sharp up move as valuations support this current level of the market. Now let us look at some of the fundamentals about the market. RBI policy, the interest raised is raised by 50 basis points, which has been very well received from the market on Friday. The GDP forecast for FY23 has been revised from 7.2 to 7%. As per RBI governor's statement, this revision is done keeping in view the global inflation and the development on geopolitical risk globally. This week, Russia has officially announced annexation of eastern regions of Ukraine. For this, Ukraine and NATO allies have given strong comments, and they want to counter this with more arms supply to Ukraine. So we may see some more escalation in the Ukraine conflict in coming days. Global inflation in UK and US continues to be at higher levels, and also we are seeing contraction in developed economies. This is in contrast to the Indian scenario. We are seeing good high frequency indicators in Indian economy. The GST collection for the month of September has come at 1.47 lakh crores, which is 26% higher compared to last year. We have seen the auto sales for the September have done very well in all segments, that is in two wheelers, passenger cars, commercial vehicles, and also in tractors. So, increase in commercial vehicles and tractor segment indicate a pickup in industrial and commercial activity in the economy. The increasing inflation may have some cost impact on FMCG, consumer durables, and oil and gas companies. The crude prices have remained high during the last quarters, so they may have some margin pressure on oil companies and gas companies. Q2 results are to be expected, that is, for the period of July to September, will start coming from 10th October onwards. So Q2 results for rate sensitives like banks will be good because during a rate hike cycle, banks' net interest margins are likely to be higher. They raise loan rates much higher than the deposit rates. So we will see a expansion in the net interest income. So I expect banks to give very good results for Q2 quarter. We may see cost pressure of margins for FMCG, oil and gas, and textiles due to inflation. Cement and infrastructure companies results may be subdued as construction activity during rainy season gets affected. Due to this reason, we may see subdued results from cement and infrastructure companies. The festival season is on, and companies are reporting unprecedented growth in sales. We are seeing demand pickup for travel, tourism, hotels, fashion wear, cinema halls. All these sectors are showing, and there is lot of waiting period for booking of vehicles. The pent up demand of last 2 years has started coming into the market, and this pent up demand is likely to result in high sales for the corporate sectors of corporate sector of various companies. The high sales of companies will result in better earning growth in coming quarters. So with this background, I am of the view that the earnings of the companies are likely to increase in the coming quarters, and hence I do not have any bearish view on the markets. So it is good time to invest, and if there is any correction due to some global news, there will be a good opportunity to invest, and this correction is not likely to long last. So informed people will buy into the dips in the market. That is why any sharp correction in the market will be a good buying opportunity. People can invest even at this level. Market valuations are fair, and especially small cap valuation is attractive. But investors have to be patient. They should have longer term view, and the investors have the opportunity to make good returns in coming years as the earnings of the companies picks up and the economy is on the growth path. So I believe that India is the largest growing economy among the large economies of the world, and this decade is going to be phenomenal for Indian economy and for the Indian markets. So investors should have patience and they should invest now and use corrections to buy. They have opportunity to make big returns in coming years. If you like this video, please share the video with your friends. You are welcome to post your comments and like the video. So this is all for this week. We'll meet again next week. Thank you.